Good morning, traders. This is Michael coming to you from Game Edge on Wednesday, November 5th with our pre-market prep session. Thank you, everybody, for joining us. Make sure you check out our X posts this morning. I've posted some content heading into today, kind of what we're looking at, and then we'll cover, as always, our three pillars here at Game Edge: sentiment, structure, and trend. I also posted a Apple screenshot of our web app, also responding to Scott Redler there on X. So you can check that out also. So, all right, let's go ahead and jump right into it this morning. We'll go ahead and go through our three pillars: sentiment, structure, and trend. If anyone has any individual equities they want to cover, you can go ahead and throw those in the chat, or any questions as we go along. I'd be happy to interact with the community. So as always, we're looking at our market trend model. This is based on the tick index. Quick takeaway: buying versus selling in the overall market. Bolded white line is our intraday instantaneous cumulative tick. Again, that tells us who's winning the battle between buyers and sellers. As you can see, it's been significantly to the downside. We talked about this extensively this past week. It was weakening on the tick US. So this is all exchanges, any exchanges that transact across the overall landscape. So this is kind of like what we call our kitchen sink. This tick is a little bit more sensitive to the downside, and we've got a ribbon cross. So this colored ribbon right here is basically longer term positioning in the overall market, and now the red is below cyan. So this can indicate a longer term pullback in the overall market. But in the shorter term, obviously the bolded white CT or cumulative tick is under that colored ribbon and continues to the downside. So good morning, everybody. Thanks for joining us. Quick takeaway up here. This is our breadth indicator, new highs versus new lows. You can just walk across the line here and see that new lows have been outpacing new highs. So it's going to be very difficult for the market to appreciate. Obviously, more stocks are being sold than bought. And then our filtered cumulative tick, this is plus 1,000, minus 1,000. These are larger institutions or market participants. Again, you can see across the board, we've been below the zero line and moving to the downside. So that means institutions and larger market participants are selling more than buying. So what we would need to see is this start to turn back to the upside, stay above zero. You really want to see a linear up day indicating significant buying and risk and capital being deployed in the overall market. But we continue to not see that via the filtered cumulative tick. So that's the quick takeaway there. Let's move on to the tick RC. So our mechanical portfolios have been off for a few days now, as the cumulative tick was crossing below the red and then emerging out below the cyan line. So this is keeping us out of the market via our mechanical portfolios, our P-trans to PX, as well as our wheel strategy. So then this in itself is a risk management model to stay on the right side of the market. So if you're looking to short, obviously this would be a prime opportunity when we started moving to the downside and the cumulative tick was under the shorter term moving averages that we use for momentum. And you'd want to stay with that until we start seeing a turn back up in the cumulative tick and recapturing at the very minimum these shorter term moving averages. And then obviously want to recapture the colored ribbon. If we move below the continue to live below the colored ribbon for the cumulative tick, we'll get the ribbon flip on the tick RC also. And this can lead to a larger term pullback and downside move in the overall market historically. So we'll watch this intently. We want to see this recovered if you're a bull fairly quickly and start moving back to the upside. Or if you're a bear, you want to see this being maintained below that colored ribbon. All right, let's move on to the SPX options structure, options market. This is the two portions of our sentiment and structure of our morning game plan that we cover. We separate the SPXA and SPXP. These are obviously the SPXA is our cruise ships or our tankers, larger institutions positioning. You'll see via our web app here that these are monthly expiries. So this is obviously longer term positioning in the overall market. We are still call dominated, but obviously you'll notice some erosion of that call speculation down to the downside. Obviously this is being removed, either the call speculation or out of the money put hedging coming into the overall structure. This historically, the past few weeks has been completely green up and down the net delta column. But again, we started to see some erosion. We are call dominated still, so institutions are still maintaining that overall call speculation via this structure. But again, we start to see some cracks in the ice and some changes in the overall structure. So we'll watch this day over day. Obviously, we're within the overall transition also. So again, that's a little bit more weakened state. We do see 6,900 up here at PGEX. So it's still speculation to the upside. So we'll continue to watch this as we head into the November expiry. All right, let's move on to the SPXP. These are our speed boats. These obviously drive the daily or weekly price. I have all expiries turned on via our web app here. This, again, is a put-dominated structure. You'll notice the net delta column is red, obviously above and below spot price, so really the whole structure. So that indicating that put speculators are maintaining overall control. We see the transition area extremely wide here. So again, that's a little bit more volatile to the downside. At least the first level that we need to recover would be the bottom of the transition area around 6,800 for bulls to start moving in the overall direction of possibly moving for price appreciation to the upside. So that'd be that key area I'd watch for failure this morning. This also matches the SPXP 0DT that we'll talk about in a few minutes. To the downside, 6750. I've already posted that this morning via our trading view scripts as well as our SPX option structure. And I also posted about technical analysis. Our options structure overlays many other trading plans extremely well. So it's easy to implement the option structure into your existing trading plans. And it just gives you another tool in your toolbox or another feather in your cap to be able to understand where speculation is in the overall market and then match it to your existing trading plan. So 6750 really is that inflection point of a larger price base where we had a breakout from a technical analysis standpoint. And then we back tested that this morning, and we seem to be holding it for now as we head into the open. So it's going to be a key area to watch. If we get below 6750, we'd obviously anticipate 6700, that round Livermore level, speculation level to the downside would be tested also. So we'll watch that as we head into the open from a technical analysis standpoint as well as an option structure standpoint also. All right, moving on to the SPXP GEX ratio. So I posted this morning. This is kind of like a put call ratio, but it's much improved as we add a gamma component, which is time to it. We're reaching an extreme on the gamma ratio, a GEX ratio. I posted a link to our blog post that you can read. Extensive education about our gamma GR tool that I think you should read. But historically, when we reach this 0.5 level, this is an area where we see a bounce. And why we see a bounce is it's an extreme or agreed positioning from put speculators. And this is usually where we see some monetization of those puts. People want to get paid for their downside hedging and risk. And this is an area where we see a bounce. So basically, you'll see a monetization of the puts. Our book gets less long as we close those puts as the negative delta. The dealer's book gets more positive as they obviously have to buy back those puts. And then they will continue that buying, obviously, to the upside for the hedging as their book gets shorter and our book gets longer and they have to hedge to flat, which would include buying of underlying or some sort of SPX or equities or something along those lines. So what we'll see is we'll see a bounce in the overall GEX ratio just very quickly as we see those puts monetized. But then if we do not see the result in out of the money call speculation to the upside, then we'll see some stalling after that bounce. So we'll continue to watch this. Again, historically, you can look over here. We reached. We reached that 0.5 level, and then we see the bounce to the upside, but without the resulting call speculation on the GEX ratio. So then you see price continue to trend sideways until you see that out of the money call speculation start to come in and drive price higher. So that's kind of where we're at the moment. Again, this could easily rapidly move back to the downside quickly if we see extensive put hedging come in, which would mean an overall drop in the overall put or overall call, short dated call gamma to short dated put gamma. So again, we'll watch this. Just a cautionary thought or a feather in your cap that we could see an overall bounce in the market, and then we'll watch to see if it looks to be maintained with call speculation to the upside, or was just a short profit-taking event for the put speculation to the downside as those puts become extensively in the money. All right, I'm going to go on to the delta bounce for the SPXP. Again, this is separated via right-hand plane and left-hand plane above and below spot price. The green dotted line is your right-hand plane. That is above spot price. That's your out-of-the-money speculation for calls or in-the-money puts, as those are above spot price. And then the red is your left-hand plane. That's below spot price. That would be your out-of-the-money put hedging as well as your in-the-money calls. So you can see the right-hand plane continues to drop extensively down towards the -1. And then the blue dotted line is the aggregate of both of those. So if you're a bull, you want to see this start trending back up towards above the 0 line and towards the +1 level. If you're a bear, you want to see this maintained at the -1 level. So as you can see, the delta balance is staying below 0. A short bounce here as we head into the 7th. And then that's obviously into Friday. And then we see a resultant move back down towards -1. So the structure is not improving on out in time towards next week at all. We do see that left-hand plane have a short bounce above 0. And then we see this extensive move to the downside. Again, that's out of the money put speculation also. But then we do see a resultant try bounce on the right-hand plane. So again, those are those in the money puts and those out of the money calls. But again, they both relatively stay below 0, as well as our delta balances at -1. So the structure is not significantly improving if you're a bull. So something to watch as we move through the overall structure and on out in time. So let's move on to the SPXP net stack command. This is our highest sensitivity levels for today. Obviously, extensive in the money puts overhead. Those are going to continue to be a headwind as we look at the SPX 0DT here in just a few minutes. 6,700 to the downside. That's that speculation level I talked about. If we lose 6,750, obviously, let's move on to the charm level. Out of the money puts, these will continue to be supportive if we're above 6,750. But you do see the right-hand plane winning the battle on the charm level as time continues to tick on today. So for below 6,800, the out of the money calls will continue to be a headwind. And you see the gamma levels, 6,750, 6,825. As I said, we need to recapture the 6,800, which is that transition area, 6,800, 6,805 for the bulls to have a chance to move to the upside. And then the net Vanna, if we do see a drop in volatility, 6,750, extensive here, and then out of the money calls at 6,800. Those are continuing to win the battle. So if we do see a drop in volatility and we see out of the money calls go into the complex, we do have an opportunity to bounce pretty significantly towards that 6,800 level. But then we'll see kind of how we act or react, and that could be that stalling point to the upside. So we'll watch these key levels as we head into today. All right, let's go on jump into the 0DTE. Put dominated structure, obviously weakened. We've already seen a bounce from 6,750 this morning. We'll look at our trading view charts here in a few minutes. Drunken Sailor range is our orange box. So extensive choppiness area. What is interesting heading into today is you see this very low exposure. We're below 1,000, which historically we do not see this up and down the Drunken Sailor range. So we're going to be driven by the intraday call and put speculation back and forth. And this is where our vol-am command that we post becomes very important intraday to see where market participants are speculating. We have 3 states of that vol-am command that we continue to watch. Both centroids to the upside is call speculation. That means we could possibly move to the upside. Both centroids to the downside, that's put speculation and not a resultant out of the money call speculation. So that would be more weakness. And then we see crossing, or what we call the chopstick pattern, where the call and centroid are contradictory of each other. And that usually leads to an overall consolidation pattern. And then we have the goalpost set by those centroids, so we can just bounce between those 2 points. And that is a good opportunity to do some sort of option structure above or below those key goalposts. So we'll watch that today. Hopefully make some intraday updates about that. Again, that's a key tool for us to understand intraday where market participants, where the herd is moving via the speculation. So we'll continue to watch that. So for today, obviously Drunken Sailor range, very wide, 6,750 to the downside. If we're below that, I would look for 6,700. Again, recapturing 6,800, 6,805, but we'll still have to get through the top of Drunken Sailor range as well as PGEX at 6,825. So again, key sensitivity level to the upside. We're going to have to see a significant amount of out of the money call speculation to overcome the charm headwind, as well as the in the money puts overhead. So that's the structure looking today. Let's go ahead and jump into the trading view chart. I posted this morning. So we've already been bouncing at that key negative GEX level, 6,750. And it's interesting that we bounced right at COTMP almost to the penny. So that COTMP level is proprietary to Gamma Edge. That's where out of the money puts become in the money. Historically, we see the monetization at that level. So again, we'll continue to watch this throughout the day. But as I discussed, that GEX ratio was reaching the extreme. Not saying we bounce at all. I'm not making absolutes in the overall market. I'm just giving you historical data, and moneyness matters, fear and greed. And this is where a greed component usually starts to creep in. And market participants that are holding those puts want to get paid for their risk. And that's usually where they do. So again, we've bounced already up towards 67.80. Again, that'll probably be a key area to the upside as we start to pull back, and then 67.95, 6800, 6805 to the upside. If we're in the drunken sailor range, again, it can be extremely choppy today. So we'll be watching our intraday call versus put speculation, as well as our vol M command. And then I would not be surprised if we retest 67.50 to the downside, but then how we act or react as we retest that level, I think will be important. Do we see a significant monetization? If put holders were not able to monetize this morning, or do we see more speculation below 67.50? We see strikes being targeted via our vol M and vol D command, which again would lead to more weakness. And then obviously we're watching our market trend model. So anyway, thanks for everybody for joining us. Let's head into individual equities if you want quickly. You can join us at gameedge.us newsletter. Put your email in. You'll be delivered this on the weekends. Again, it goes over our strategies, our thesis, our tools, everything. And then our blog, I think it has extensive our free courses, obviously Game Edge Fast Pass. Sign up for it. All of our tools, methodology there. You can go through that even before you come in the Discord or join us. And then as always, our blog has extensive education. You can go over the the GEX ratio tool that I just covered right here, how to predict market reversals. I would encourage everybody to look at those, and then how we look at the overall option structure and market. So let's go ahead and jump right into it. We'll cover some individual equities. Again, thanks for joining us, everybody. If anybody has any other questions, comments, content they want to go over, just discuss the market in general, I'd be happy to discuss that. So let's look at IRM. All expiries turned on, call dominated, looks good, above transition. Transition's fairly wide though. That may be just be due to the algo drawing that looks like to the downside somewhere. Some speculation is. So 70 is PGEX. COI is off the chart at the moment. So this is kind of that high sensitivity point where we can see some monetization and some stalling, and then we see COTMC to the upside. Let's look at the expiry for this week. Call dominated, 70 is PGEX. We do see 108 up there. That's just a way out of the money call speculation there, so not really in play. So I think 70 may be a cap on price. At the least, 75 would be that upper area that I'd look for some monetization or some stalling as we head into the week on IRM. AMD, let's take a look at AMD. Call dominated, still call speculation continues. We are below transition though on all expiries, so it's a little bit weaker. 240 would be that downside. I'd look for some bounce or a possible bounce monetization area from put speculation. PGEX 260, so call speculation to the upside continues to be maintained. Everything looks good there. 260 for this expiry, and 270 PGEX CY structure continues to advance on AMD. So AMD looks good. Hopefully that helps. Burrow Walker, let me know. Tesla, always worth a look. Exactly. So 500 is not changing at all within the overall speculation structure. And with this massive not massive, with this pullback in the market, we're still above transition area. So Tesla is holding very strong. Call speculators not changing their bets. 460 for this week, 500 after this expiry, and then 500. So Tesla may be one of those stocks that if the market starts turning back up, really has an opportunity to move significantly to the upside very rapidly, Mr. Hedge Fund. So that's one I'm going to be taking. Yeah, Burl. Yep, you have a great trading day too. Appreciate it. ARM, let's look at ARM. Call dominated. Below transition though, it's a little bit weak. 160, 157.50 is where I'd look for some bounce monetization, at least on if there's a put speculation to the downside. This week's expiry, 175 PGEX. Below transition though, so a little bit weaker there. You see put dominated. So ARM would not be a stock that I would jump into right away if the market starts turning back to the upside. Meta. So what we want to look at when the market actually starts turning back to the upside is the stocks that have maintained call domination and the overall transition and structure continues to move up. And we have scans for that within Discord. Call dominated scan, net call dom del, which is call dominated on the delta part. And those are the list of stocks that when the market starts turning back to the upside that we want to be ready to jump into, because those are the ones that have the call speculation already in place that can drive price to the upside. Meta call dominated below a very large transition. The net delta looks extremely bleak from the positioning standpoint. So obviously there must be significant calls below us that are continuing to maintain that call dominated state. So short term, here we go. Put dominated below transition, 650 to the upside, very weak here. Nothing looks good there. But after this expired, we actually moved back to call dominated. So the structure is conflicting there, at least on the short term and long term, but seems like call speculation is still being tried and maintained in Meta. That would be one that I would watch for a possible move, bounce back to the upside. But conversely, when we just looked at Tesla, it was maintaining call dominated above transition. Structure continued to be maintained much higher and actually advancing after expiry. So that'd be one of the first ones I would look to jump into. GLD. Let's look at this one. Call dominated at the bottom of transition on all expiries, right at P or NGEX and COTMP. So we'll see if that continues to hold. 380 to the upside, PGEX COI. Let's look at this. Oh, we have Wednesday expiries. So call dominated on GLD. Still looks good there. Let's look at the next expiry. 370 being maintained within the overall transition. So a little bit choppy, Tom, as you know. 360 looks to be a pretty good downside level that probably needs to hold. Structure being maintained, 369 to 370. So that would be that upside speculation area I'd look for. So, yep. All right. Anything else anybody wants to cover? We're at 9:22. Heading into the open here in a few minutes. All right, I think that's it for. Thanks for joining us this morning. Again, like and subscribe on X and YouTube. We might pop in here at the open for a little bit and do a live stream. I'll see what our team is doing. I know Taylor's been on every morning on the open, so I think that's been helpful for people out there in the X sphere. So as always, thanks everybody. All right, make it a great day, manage risk, and we'll see you later.